name is Elizabeth Muse, and I'm the Senior Director of Global Engagement and UVA Clubs in the Office of Engagement. Thank you for joining the UVA Clubs program for our second conversation about cryptocurrencies. We're moving from the 101 of cryptocurrencies and into what's next on the horizon for investors, markets, and the University of Virginia. We have close to 700 alumni and friends registered to join us today and dozens of submitted questions. Before we dive in, I want to note that the event is being recorded and that closed captioning is available. If you have questions as we go through our conversation today, please use the Q&A function at the bottom of your screen. We will try to answer questions after our main discussion. And now we are going to launch a poll to get an understanding of the community's participation in the cryptocurrency market. Fantastic. So it looks like we have about 40% of the audience that is with us at this moment that has purchased cryptocurrency. And we've got a lot of those who are really interested in what the asset class is and how you might be able to join in. Well, at this time, I'd like to invite both of our guest speakers to turn your cameras on and to join me, and we will start the conversation. Wonderful. Today, I'm excited to welcome Kristina Alimard. Kristina is the Chief Operating Officer at the University of Virginia Investment Management Company, known as UVIMCO. Kristina is responsible for all non-investment functions at UVIMCO. Kristina is a 2003 graduate of the Darden School of Business, where she was awarded the William Michael Sherman Award for Academic Excellence, Determination, and Service. Kristina joined UVIMCO in April of 2003. I'm also excited to introduce Todd Simkin. Todd is a 1997 graduate of the college, and since graduating from UVA, Todd has worked as a trader for Susquehanna International Group, or SIG. Over the course of the last 24 years, Todd has traded equity options, ADRs, currencies, and fixed income products. Currently, Todd is the CEO of SIG-RE, a Bermuda-based reinsurance company, and an investor with SIG's private equity team focused on decentralized finance and crypto assets. Let's get started and explore cryptocurrency's horizon for investors, markets, and the University of Virginia. So why don't we get started, Kristina? How did you initially get interested in cryptocurrency?
Sure. Well, I guess I will answer the question maybe first from the perspective of UVIMCO. And I would say we probably started really focusing on crypto maybe 8 years ago. And what we do is simplistically cover the global investment management universe with 40 people. So it's really our job to have our finger on the pulse of what's going on. And when something as significant as, a brand new asset class comes up, of course, we would look into it. So really started, like I said, studying it about 8 years ago or so. We would do kind of deep dives into the space and say, what is this exactly? And, from a fiduciary perspective, is it appropriate to put UVA's money in something like crypto? So really began those conversations better part of a decade ago. So obviously that's kind of when I personally also became first, aware of what crypto was at the time. Of course, it's very different today. I'm interested in it personally. Of course, it's hard to spend time on something all day long every day and not take it home with you. So I would say UVA's interest, UVIMCO's interest, and mine kind of started at the same time.
Thank you. And thank you for giving us that time frame. And Todd, same question for you. How did you initially get interested in crypto?
Yeah, so a similar story to what Kristina had to say. It started off as an asset class that looked a little funky, a little bit different than anything else that we were seeing. And early on, in the early days of Bitcoin, we just had conversations around the trading desk about whether this was a real sustainable asset. How crazy is it that this thing that was just worth $600 has shot up to $2,000? Is that sustainable? Is there any way to short it there? Because this seems like a crazy thing for what people have called nerd money. But then over time, it's become really very evident that it is a real asset, that it has attracted financial interest around the globe, and the use cases become more and more obvious the deeper into it that we've dug. So I became interested in it similarly around the same time that the firm was interested in it. And my initial investment in crypto was not in Bitcoin or Ethereum, which is where I think most people start, but it was in stablecoins. And I think hopefully we'll have an opportunity to talk about stablecoins later on. But initially my interest was that stablecoins offered what looked like a pretty low risk return because these different platforms were looking to attract assets. So my personal first investments were in stablecoins. The firm was already up and running with the trading desk that was providing liquidity in Bitcoin, where we were both buying and selling, not just Bitcoin, but altcoins as well, and looking at the relative value as its own unique asset class.
Thank you, Todd. And staying with you for a moment, I hope we'll get to talk about the stablecoins in this conversation. And if not, we're going to continue these conversations because the interest is robust and the area is just very, very broad. And so we'll have the opportunity to be able to do that. You're talking about the investment piece for the firm. At that time, when you're thinking 8 years ago, how quickly did the firm start really delving into that? Was it slow? Did you take a large stake? What did that movement look like? And Kristina, I'll bring that back to you as well for UVIMCO. What did that runway look like?
Yeah, so our goal was never to find an underperforming asset that we were going to buy and hold for the long term. That's just not the philosophy of SIG. Our approach is instead to be high information liquidity providers. So we're looking to buy and sell at appropriate times. So it wasn't the case that we said, you hear something that's trading $2,000. I bet in a few years this is going to be trading for $52,000. So let's go ahead and load up now. I wish we had that prescience. That would have been a nice little piece of insight for us. But instead, we were doing what we did in a bunch of different asset classes. That we were looking to understand the risk that was underlying in the product, and then put ourselves in a position where we could learn information based on the information flow in the market, where other people were willing to buy and sell. And importantly, the payouts for cryptos, particularly in the early days, looked very asymmetric, right? It was easy to see how this could go to zero at the time. In fact, that was a lot of the conversation that was around. But there was this big open question about how high could this go? How much could this be worth? How much of the world's assets could this really attract? And as we started thinking about that, we realized that the payout structure of cryptos looked a lot like the payouts of derivatives. And we got our start in derivatives and really have our expertise in derivatives. And this asymmetric payout where most of the time you lose your investment, but sometimes you win a lot more than your investment, made this a really nice fit for our entire investing approach.
Todd, thank you so much for bringing in and having that analogy, because I think that helps understand how one takes, or an investment firm, which you're both representing, takes a position on something with the vision of what else it looks like in the market. Kristina, to you as well for UVIMCO, how was UVIMCO looking at? Was it a short-term hold and sell? Was it a long-term commitment, or a combination of both?
I think maybe between Todd and me, you almost have like a opposite end of the spectrum approach here, right? So both from the institutional perspective instead of the individual perspective, but very, very, very different kind of modus operandi. So as a university endowment, we do not provide liquidity to the markets. One could say we might provide illiquidity to the markets. So we're really looking at the opposite. Where can we make a lot of money over an incredibly long time horizon, an infinite time horizon, actually. So not too worried about any short-term fluctuations or movements or whatnot. So actually, when we very first looked at crypto, what was the most attractive to us was actually the underlying blockchain technology itself and the potential applications of all of that emerging tech. We saw that as, a really potentially transformational wave that could go through not only all of finance, but quite frankly, at some point touch all of our daily lives. And so really saw that as being super interesting. And that's really kind of where we focused, especially initially.
Thank you. And for the audience, we did have many questions about blockchain as well, all the way from the basic concept of what blockchain is to the utilizations that Kristina has just talked about across the finance industry, law, all sorts of different applications for that. And I hope towards the end, we'll be able to talk a little bit more about blockchain. One of the things we were just touching on was the institutional aspect of the purchasing of cryptocurrencies, whether it is for use and selling right away, or that long-term piece that Kristina is just talking about. Thinking about the person, thinking about the individual, are there insights, Todd, to begin with you, that you could offer for individuals? If we've got 40% of our audience in our community that have already purchased crypto, most of them, I'm going to assume, for themselves, not for other large institutions, and 60% who are not yet having purchased this asset class. Are there just tips before we go on to other questions about for individuals in cryptocurrency?
I will preface this by saying that this is not investment advice. I do not want to guarantee anything about the future returns of crypto or any other asset class. Do your own research, invest wherever you think it's appropriate. Instead, I will share my experience, and you can take from that what you will. What I've wanted in general in my investment portfolio is in places where I have little information, is I've wanted broad exposure. So I don't think that I know a whole lot about the difference between Coke and Pepsi in terms of their expected future stock performance. So I don't want to be in the position of picking one stock over another. Therefore, I'd rather own an index fund that happens to have exposure to lots of different products in the market. In the same way, I know that the stock market is not all of the exposure that I want, that I would also like to have exposure to venture and to private equity and to fixed income and this new asset class of crypto assets. And to that end, for me, it's made a lot of sense to have some portion of my portfolio, but certainly not the majority of my portfolio, invested in crypto so that I can participate in this in what I believe is going to be a growing area of interest, a growing area of that will attract funds without having to pick a winner. There are people who think that there's going to be a very clear winner, and those people have all put their bets in Bitcoin. But there are lots of other crypto assets as well, cryptocurrencies and other tokens that are worth considering. And to that degree, to the extent that you can get some broad exposure, I think that it makes sense to do so.
Thank you so much. And thank you for the disclaimer. I do want to reiterate that this is a conversation, this is insight, but every person is responsible for doing their own research, getting their own advice. This is a community conversation. Kristina, to you, are there insights that you have that you might be able to add to what Todd has just provided?
Well, I think that from an individual perspective and an institutional perspective, there's, at least for me as an ops person, there's a big operational component to this. And I think as an individual, you kind of have to do your own research and do your own work and have considerations as they relate to safety of your investment versus kind of ease of use and ease of trading, right? So to say that differently, and this isn't really even in the press that much anymore, but there used to be a lot of conversation about hot storage versus cold storage, right? And so your crypto can be, on this little key that you then hypothetically could lock in a safe deposit box somewhere, and clearly no one can actually get to that digital information anymore. People have really moved away from all of that, and everyone just wants to pick up their phone and trade. And I think picking up your phone and trading is super easy, super flexible, but it does, I think, open some doors that, again, as an individual, you just want to accept that additional risk that you're taking. So as a personal, user of Coinbase, I'll get these messages on my phone. It's clearly someone hacking something, right? Getting my phone number and sending me these alerts that say things like, Kristina, your blankety blank 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 is at risk of being stolen. And, it's just, phishing 101. But I think as the industry continues to just move so quickly and change so quickly, each person, when they think about buying any sort of crypto, being able to sell it, which again is usually part of the deal, how you want to think about those trade-offs of safety, security, ease of use, reporting, et cetera. Those are all individual conversations that people have to have. For UVIMCO and UVA, obviously, the safety and security is pretty paramount. And if that means that 6 of us have to jump through hoops in order to place a trade, then that's what we'll do. Retinal scan and, giving blood, doesn't really matter what it is, because we can't really accept those kind of ease of use risks that the individual can accept if they want to.
Thank you so much for delving into that. And I love the retinal scan. Absolutely
It's
amazing. I know it's absolutely amazing what the team has done in the market for the university and for the future of the university. So I'll just give a big shout out and a huge thank you right now. Moving, and you just touched a little bit on this, right? Which is the security and also the growth of this, the being able to trade on your phone. And so much of the popularity, and Todd, I'll kick this to you first, over COVID, and people are in their homes, they're kind of locked down in their homes, they're looking at cryptocurrency. And so can you talk about the impact of COVID it has had on crypto and the market, what that is, and then maybe what you see could be as we move out of COVID in the coming months?
Yeah. I don't know that I'm going to have a lot of great insight into the forward-looking comments, just because not for the concerns about giving advice, but really because the short answer is I don't know. COVID has been such a unique experience for everybody and across the board that it's really hard to causally link the different timeline of COVID with what's happened with crypto. At the beginning of COVID, I want to say that Bitcoin was trading just south of $10,000 per coin, and today it's 52,000-ish. Ethereum was $145, I think, at the beginning of COVID, and today it's $4,400. So we've seen certainly a gigantic growth in the value that people are putting on the crypto assets. There's a bigger question of why. Part of it is that we happen to be catching this at the early stage of growth of this entire asset class. So whether or not that's related to COVID isn't very clear, although I think that there is certainly a relationship here. I think some of the relationship came from the same thing that we also saw in the derivatives markets, which was a whole lot of people betting much smaller amounts, but in much larger volume, because there were just a huge volume of people that had time on their hands, that were working from home and able to jump onto Reddit sites and get advice from other peers and pile into trades together. And some of the trades that they piled into were GameStop, which sort of saw huge volatility as a result. And another area that they jumped into was a place like Bitcoin and other crypto assets, because all of a sudden you had a lot of people with a lot of time looking to make what they felt individually was a small investment, but in aggregate had a very large impact on pricing. The other thing that I think is worth noting about this, though, is, as I've mentioned, this is a very risky asset. And one thing that we did see time and again is, as bad news came out about COVID, there was a flight to quality and crypto sold off. So if you look at, sort of the overall trend is certainly an upward trend over the last year and a half or so. But if you look at where those micro spikes are and where the micro drops are in that trend, every single time there was news about a new variant or about increasing lockdowns or whatever the bad news was, you would see people move away from risky assets and sell off their crypto to move into more secure assets like fiat currency at the time.
Thank you. And one of the things that you just said, I just want to touch upon because it gave me pause was that you're mentioning crypto as a sort of a young asset. And you both said that you have been in this for 8 years, which makes me think this is a really long time and this is more of a mature market. So are we at in a young market? Are we a mature market, or is it mature because it's been going along, but young because blockchain technology has not yet gotten its feet under it completely? Where are we with that?
Yeah, I don't think that we have yet scratched the surface of how blockchain can and will change the way we exchange information and money and healthcare. Like I think that there's an awful lot that's still to come. As all of that happens, there needs to be some currency, either literal currency or some informational currency that fuels that process. So I think that we're still at a very early stage of what this entire technology is going to grow into.
I couldn't agree more. Again, I have an endowment perspective, and what I always say is, this endowment was around before any of us were born, and it will be in existence when we're all gone. So that's kind of how I think of it. And I don't want to overstate it, but one could argue crypto is a little bit like, the printing press, right? Or the cotton gin, or the invention of the wheel. I mean, it really does have the ability to transform so many things. And if you think about just technology writ large and how it touches every single part of our daily lives in a way that it just really did not even a short 20 years ago. So, it pervades. I mean, we're on a webinar, right? These things did not exist. And so for me, 8 years is, 5 minutes. And I couldn't agree more with Todd that I think it's going to be really hard to predict how this plays out. But if it's anything other than pervasive in our day-to-day lives, I'll be very surprised.
Thank you. And Kristina, staying with you and going back a little bit to the piece on markets, we were talking about the volatility of cryptocurrencies. Todd mentioned that, and being able to watch spikes and things that are happening, and that cryptocurrencies look more like growth stocks than currencies.
Mm-hmm.
Are there cycles, to build on what Todd was saying, are there cycles that you see, and are there ways for us to look at what that high volatility is and kind of see how that market is growing comparatively?
So, again, getting back to my assertion that we're 5 minutes into this, to me, we have 5 minutes worth of all data, right? And to Todd's point, in the last couple of years, there's been a flight to quality when, those dips happen. But, I would love to have 20 years maybe worth of data before we start making really super clear assertions about correlation. So for example, last I checked, the correlation of Bitcoin and S&P 500 in 2021 is, 0.3. So simplistically, Bitcoin and will move 30 cents for every, dollar the S&P goes up or down. To me, that doesn't sound that highly correlated, but it is. And really then how much of the S&P 500 vol, is tech stocks, right? Because they're all kind of trading, similarly, especially in 2021. And so I don't know, I get a little bit antsy about drawing super strong conclusions at this point in time. I do think fundamentally it's a sentiment driven market, right? And that's what folks need to understand. So hypothetically, a publicly traded stock hypothetically trades at the present value of the future cash flows, right? There's math behind it. There's a business behind it, and ideally, product and people buying and selling and whatnot. Whereas this is at this point in time, this meaning crypto, generally speaking, not backed by anything. And so the value of it is what people think the value should be. So, if Elon Musk can move, the value of a crypto asset up and down by tweeting, that should tell you something about the risks of investing in crypto and how, fundamentally, again, it's a market driven by sentiment. And then you'll also see these shocks because it is so nascent. So when regulation comes out, how are crypto gains or losses, impact your taxes, right? And different geographies and political bodies around the world making decisions about, how they will treat crypto. Will they close their borders to it? Will it be an open market? You saw a lot coming out of China this year about cracking down on miners. So again, to me, this is a baby industry and a baby asset class. And so it's definitely going to go through some growing pains, I think. And again, we're not giving investment advice here, but at least up until a couple of years ago, smart folks that I know said, hey, put as much money as you want in crypto, just be absolutely ready to lose it all. And I think that that's very good advice.
Kristina, thank you again. And we will absolutely reiterate, this is not investment education. The University of Virginia is about education, as is the UVA Club's program. And Todd, thinking about that, right? You've got the young nascent industry. You've got driven by sentiment for folks. What does that look like right now in cryptocurrency? And are we in a bubble? Is there any way to know, because emotion is driving something and Elon Musk can change it in, as Kristina just said, in a tweet?
Yeah, so I think that people have a very clear idea in their head of what a bubble is, and nobody has the same idea as somebody else. So to the extent that the question is, are we at a price that can fall? Absolutely, right? Like, yes, if it can rise from here, it can also fall from here. Otherwise, it would be undervalued. So yeah, this is not necessarily going to be the terminal flat, stable price of all these crypto coins forever going forward. But are we in a bubble? As in, like, is this a lot of money that's chasing nothing? I'll point out that every time anybody talks about an asset being in a bubble, they bring up the tulip bubble from 1636. And if you have to go back 400 years to come up with a comparable phenomenon, maybe it doesn't happen all that often. Maybe it's not that real, and maybe it isn't something that we should worry all that much about. We talked about the tech bubble 20 years ago. It was very clear that things were unsustainable, and we knew that because values dropped, except that total value didn't actually drop. We saw at the time the NASDAQ, which was sort of the proxy for all tech stocks, was trading around 4,500. In 2000, came crashing in a year or so later to 1,000. It was at about call it a quarter of its value. So everyone's conclusion was obviously we were in a bubble. Except that today that same index is trading at 16,000. So people don't talk about it as a bubble when you win. They only talk about it as a bubble when you lose. And what we're really talking about, particularly with the tech stocks in early 2000, is that we're in a tournament that all of the tech stocks together were worth what they were trading for, and then someone. So you had some companies come out of that like Yahoo and Microsoft, and you had other companies like WorldCom and Pets.com that fell to zero. People looked at the ones that fell to zero and said, well, obviously this was unsustainable and we were in a bubble, but nobody then said, unless you happen to invest in Microsoft, which was not part of the bubble, we get to carve that out, and we know it wasn't part of the bubble because it won. The same is happening with crypto assets. We've got thousands of coins out there. It's going to be really hard for me to tell you which coins are going to be valuable. I do know that it's not going to be all of them. And it's not going to be all of them because some of them are fundamentally flawed and should be trading at zero, and they don't have good technology behind them, and they don't support a legitimate business activity where they should be attracting assets. So they're going to fall off, and the people who invested in them are going to lose. That doesn't mean that they were part of, wrapped up in some zeitgeist that got them involved in the wrong thing. It means that they didn't do their homework and they didn't look at the assets. There are others that are really strong. Bitcoin itself has a really strong protocol for how it's written, and as a result has been continuously operated from the time that it launched without any interruption, without any fraud, without any attacks there have been many attacks without any successful attacks. This is probably an indication that this is something that people are legitimately using as a store of value and will continue to hold its value, that it will continue to serve a purpose. So I don't think that we're in a bubble as in this whole thing is on air and is going to fall to zero. And I take issue with the fact that bubbles don't even really exist in financial markets anyway. So
Thank you.
I'll stop there.
You were right. Conversations always come up about the tulip craze 400 years ago. And I really appreciate your putting that in perspective. If you have to go that far back, we've got to look at some other things. And you're right on the tech component, looking at 20 years ago. Kristina, moving over to you, just a little while ago, you talked about the risks associated with investment in crypto. Actually, I knew you were talking about it, sort of the thumb drive versus having it online and accessing it on your phone and phishing. Going back a little bit into the banking system, right? We've got protections built into our banking systems, our financial systems, go into work with the institution of your choice. Can you talk a little bit about the risks of investing in cryptocurrency, or is there anything else you would want to just share on what those risks might be versus having assets in a fiat type currency or gold or something else like that?
Sure. I could talk about this all day. I will try and let Todd weigh in on this as well. But I would say, first of all, I agree. It's hard to talk about crypto, with just one massive blanket, right? I mean, there are very different investments, very different underlying technologies, protocols, use cases, what have you. So actually what you're buying and selling, kind of dictates what the risks are to a certain extent. I would say, right off the top of my head, the greatest risk is probably the flip side of in my opinion, one of the greatest attractiveness aspects of crypto is that it is decentralized, right? There isn't this thing in the middle. And so that's what really enables the flexibility, enables, cross-border movements, et cetera. And it's really the beauty of crypto, to me, is what also is probably the greatest risk, is that you don't have, a government or what have you behind it. Obviously, and again, I'm generalizing because the stablecoins are a little bit different, but that to me is a risk. People talk a lot about fraud, obviously a risk. Legal, we already talked about, as regulations continue to change, overnight, something that could happen that really adversely affects people's ability or institutions' ability to actually use, the crypto in the way they thought they could. I would say, at least from UVIMCO's perspective, one of the risks that we worry about a lot is the liquidity risk. And so, again, for an individual, if you have a couple $100 in something, maybe it's not that big of a deal. If you can't sell it into, for example, a falling market, when you get, to tens of millions, hundreds of millions of dollars, liquidity risk is a real risk. And so not only do we want to be able to buy when we want to buy, but we really need to be able to sell if we ever do want to sell. And I think that kind of the liquidity risk profile of some of these different cryptos is far from proven. I want to get on my soapbox for 1 minute about a completely different class of risks, and then I'll turn it over to Todd. I think behavioral finance is absolutely riveting, and I think some of the behavioral finance risks are actually more apparent in crypto than in other investments. So what I'm talking about is, these things that are in our brains that make us, for lack of a better way to put it, act in an illogical way. So if anyone is a student of behavioral finance, there's anchoring, right? So you buy something at a certain price, and then all you can think about is that price, right? And you kind of lose your ability to take a step back and say, okay, well, I bought Bitcoin at 8,000 and, it's now it's double 8,000, right? Or it's half of 8,000. And it's like, well, you bought Bitcoin at 8,000, but why does 8,000 matter? It matters to you. So people anchor a lot. There's herding behavior, right? And that's the whole also kind of the Reddit meme stocks and all that. People made a lot of money a short 10 months ago, piling in as a herd, which is a, pretty decent way to get a quick return and a really great way to get slammed as well. So overconfidence, I think overconfidence is rife in crypto right now. A lot of people, again, picked up their phone, put $100 in something, and now it's 200 or it's 1,000 or it's whatever. And they're like, I'm a brilliant investor. And it's like, okay, well, maybe you are a brilliant investor, and also maybe you're just really lucky. So I think there's a lot of kind of behavioral finance traps and risks that, again, they're applicable to everything, but I think they are absolutely super evident in cryptocurrency. And so before you put your life savings in crypto, pick up a book on behavioral finance and just make sure that when you're exhibiting those behaviors, you're aware of them.
Thank you. They're perfect. And
Todd, please add to that.
It is my favorite thing. I mean, I've heard you say a lot of really good things, and it's my favorite thing that you've talked about. I 100% agree. I think that there are, and I will caution that even reading the book isn't going to be enough. You have to have somebody else point out your behavioral flaws, because you're going to be blind to them. That's one of the biggest behavioral flaws. But the other thing is that I think crypto has this image now in people's eyes of being this place where I can get rich quick. And that's awesome, right? Like, I know my friend from high school who happened, who was such an idiot, is now a millionaire because they got into crypto early. I want that same experience. So instead of doing the right homework of figuring out sort of what is a healthy crypto protocol that I can get behind, where I can put my money safely. Instead, people are saying, what's the cheapest one that can go up a lot, right? Dogecoin looks great because if Elon Musk happens to have a day where he chooses to tweet about it, it can triple in value in the same day. I can make 3 times my money. That's super exciting. I think the biggest risk that people have is going to be not looking at this as a maturing asset class and a store of value, but instead as a place to buy lottery tickets. And if you want the lottery tickets, you're going to find a lot of low-priced crypto assets, but they're probably low-priced for a reason, which is that they don't have a lot of value, and you shouldn't expect them to have a lot of value going forward. That's where I think people are going to lose a lot of their money, not in the more established platforms and protocols which I think will hold value, but instead in the places where people are looking to make up for the fact that they missed out on the Bitcoin craze, so they'll catch it on the next one.
Mm-hmm. Thank you. And I think that analogy that you just offered on the lottery ticket is one that resonated with me. So thank you for that. And the whole conversation around the behavior and how that is driving your decisions, and the blindness to your own behavior as well, and how that can really help you. One of the things that we have been talking so much about the currencies themselves, and I think, Todd, you touched on it very early at the top of the hour, was about Coinbase. So can you talk about some of the platforms that and what those additional risks are for holding within a platform, other than holding an asset directly in and of itself?
Yeah, there are a lot of players that are looking to launch platforms because it's a good way of attracting assets and generating fees without having to take much risk, depending on how they do it. There's some people who've done this really well. Kristina mentioned Coinbase as a place where, I don't know if she was saying she personally holds it on Coinbase, or if UVIMCO does, and I believe that UVIMCO does, because Coinbase has done a really good job of building out an institutional platform, a place where institutions can safely and comfortably transact. It's important to know what a platform does, right? That on its surface, it feels like this is the app that I download to my phone to access it, but then what? And it does different things. So it does it provides access to the market. So they will depending, a good platform will actually guarantee the trades that happen on their platform. So if something happens on the back end where there's an issue, they'll still make you whole to your trade. So they'll provide the market access. They'll provide custodian services, which means that they don't just send you your key that you can then take offline yourself and put in cold storage, or put on a USB card which is super secure, but you don't have ready access to the market if you then want to transact with that crypto asset again later. They will sometimes provide financing if you are if you're doing a lot of transacting on there. They will often have their own stable coin, which is a really nice way to have sort of an on-ramp and an off-ramp without having to move back to fiat currency. So there's a lot of different things that a platform provides, which is an important thing to recognize, because otherwise, if we only talk about the risk, it's like, okay, well, then I won't use a platform. Instead, I'm going to build my own whatever access to the markets, which is very likely going to be very unsafe. The problem with the platforms, though, is that these are the people who are the subject of attacks, right? If you're going to be hacked, people aren't kicking down my door to go find my USB thumb drive to get my access to my personal crypto assets. It's just not worth it, and people don't even know where I live, right? Like why would anybody come to my house for it? But everybody knows where Binance is. Everybody knows where Coinbase is. Everybody knows where Voyager is. And if they are the store, if they're the place that is holding all of these keys and holding all of these assets, then those are the places that are getting attacked. And that is what we're seeing. That I mentioned earlier that Bitcoin has never been hacked. But that is not to say that people haven't stolen Bitcoin. They just haven't done it through the Bitcoin protocol. They've done it by stealing the access that these platforms have. So doing some diligence and making sure that the platform itself provides some robust security, I think is a really important thing as you're figuring out what platform to use and where to invest. There are risks, and the risk is that you don't have your asset. You have an IOU on your asset, right? It's a really valuable IOU, but who would you want to put that faith in? Who would you want to put that trust in? Do the same vetting here that you would do if you were vetting a bank or if you were vetting anybody else that you were going to have hold your money for you.
Thank you, and I think that is a wonderful way to say that, is the IOU and vetting the company that you're with. Kristina, was there anything you wanted to add to that? I've got one last question before we start moving to the audience.
No, I thought Todd covered it. I mean, it's just, as he was talking, I was thinking about other assets in our lives and how cavalier one can get, right? Like leaving a laptop in a car unlocked, just like, oh, I'll just be gone for 2 minutes or whatever. Some of it is just, we're not used to all of this, but some of it is, there's not the same protections behind your bank, behind your crypto account that there are behind your Bank of America account, right? And it'll be interesting to see how regulation does or does not change that going forward. But yes, I think, maybe if we had just one kind of tagline for this particular webinar, it would be, do your research, right? Read, talk to people, keep reading. It changes every single day. But just make sure, that above and beyond, how do I invest in crypto? You Google, what are the risks, right? And just, keep going through the same education that you may or may not go through before you invest in Tesla.
Thank you. Perfect. And I think on that education piece, I'd love to go back before we open it up to the question and answers, is the stable coins. We talked about it at the beginning of the conversation. You just mentioned it, Todd, as you were talking about Coinbase buying and selling stable coins and fiat currency. I would love it for myself and for the audience, if you could sort of move us through that lifeline and what that looked like and what that means.
Yeah, so a stable coin is a coin algorithmically designed to hold the value of the fiat currency. I'll speak of it in US dollars. A lot of stable coins are US dollar denominated, but it could be sort of any fiat currency. But the idea is that if you buy Bitcoin today for $52,000, tomorrow it might be worth $54,000 or it might be worth $48,000. Who knows? If you buy USDC today for $1, tomorrow it'll be worth $1, or maybe it'll be worth $1. Who knows, right? That the idea is that this will always hold the value of being 1-for-1 with the US dollar. And the advantage of this is that you get to move your bank account fiat currency assets into a crypto world where now it's easier to transact with other cryptos. It's easier to transfer from a one crypto asset to another than it is from fiat to another. The big caveat, though, is that this is still investing in a protocol, and you still have to understand what the underlying assets are. So for USDC, the one coin I mentioned, it is backed dollar for dollar with US dollar assets. So as they bring in money, they buy US dollars. So they have a treasury offset to the outstanding US dollar coin. That is not the case for every coin that is a stable coin. So some are riskier stable coins than others because if everybody wanted to withdraw their stable coin at once, they wouldn't have the money backing it up to be able to do it. Tether is another really good US dollar based stable coin. But there are others that are less accessible or for whatever reason less liquid. Some of these platforms themselves do issue their own coin. Gemini is a pretty widely known, well-known platform backed by the Winklevoss twins. This is something that people know pretty well. But if you want to transact in stablecoin on their platform, they really push you to use GUSD, which is the Gemini US dollar coin, which is great because it does the same exact thing that any other stablecoin will do, except if you wanted to then move it to another platform, you're going to have transaction costs even just going from stablecoin to stablecoin. So again, to Kristina's point, do your homework. And the other thing that I mentioned at the top of this was that a lot of these platforms were looking to attract assets in order to grow so that they could become the dominant players. And the way a lot of them did that was by offering a return for holding assets on their platform. So I don't want to endorse any one of these platforms, so I won't say any of the names, but I know that a couple of them on stable coins were paying 9% a year. It's a really good return, right? Like if you could get 9% in your bank account, it'd be high fives all around, right? Like nobody's giving 9% returns on holding dollars, but they were offering this return for holding stable dollars, crypto dollars. Again, that comes with some risk, and that risk is that it's not a secure coin that's underlying it, or that you are really trusting this into this IOU to the platform, and you're not holding the ultimate end asset.
Well, thank you. There was so much in that last piece that we have just talked about, and I think in the last 10 minutes that I hope we have the opportunity to build upon in the future, because you introduced the concept of the organization being a bank. It sounds like there is like FDIC, and I think of in brick and mortar banks, and the insurance that you have or the insurance you don't. And it goes back to reading, research, and education. So I just want to reiterate that for our entire audience. And now we're going to transition into the questions. So please put your questions in the Q&A at the bottom of your screen. I also have dozens of questions that were submitted in advance, but I'm going to take a peek at what has come in, which is quite a few. Okay, so I'll start off the top of this one with Stefan Lukoff. He said, ask the questioner, what are some of the go-to resources that allow you to tap into the pulse of the crypto space? Are there newsletters, emails? What do you receive that you are following and learning?
I would say this is maybe where we have a little bit of an unfair advantage, because we meaning UVIMCO has some crypto directly, but generally speaking, it is held through external managers who literally study this stuff all day long, every day, what seems like 24 hours a day. So I would say our primary source of information that we truly rely upon and trust is the research that's coming from those kind of individual specialist managers who focus on the space. So that's really what we do. I would say as an individual, again, I am a big fan of Google. I think that, when you find folks or periodicals or whatnot who just kind of attack this topic in a way that resonates with you, then, you get on those subscription lists or what have you. So again, I love this space. I think it's super interesting, but I do think that anyone who just talks about how great it is and doesn't talk about the risks is not really a source of information that I'm personally interested in following. And so I would say, again, there's YouTube videos out there, right? And every once in a while you'll find someone and you're like, they just sound like they've really thought about this. And they're bringing to mind different aspects of this that I hadn't thought of. And so, follow that person and see. It's funny, in terms of a hardcover book or whatnot, they just appear to be almost like outdated by the time they hit your desk because everything changes so fast. So I think, obviously the internet really is probably your best source of up-to-date information. The Coinbases and Fidelities and all those, folks that are focused on the retail space, they all have subject matter experts as well. They're all putting out information. And so maybe that would be a logical place to start. The Gemini folks, people who have kind of doubled down from an institutional perspective, thinking about how do we create and support the retail marketplace. Those folks, they are paid to put out research that's helpful to the individual. So another good place to start.
Todd, what about you? What resources or insights could you provide to the audience as they're learning and wanting to be educated even more? So
for seeking education, I think if I could only give out one website to go to, it would be hope.com, HOPE.com, which does a good job of aggregating information from a lot of the platforms and a lot of other places. I will say that to some degree they are Bitcoin maximalists, so believers that Bitcoin is going to be the winner in this tournament of coins, and to some degree they are cheerleaders. That this is a website that was started by Michael Saylor, whose company MicroStrategies invested $425 million in Bitcoin from the treasury of the company. So that, instead of holding dollars, they hold Bitcoin as their treasury asset. So they are a bit of cheerleaders. That said, there are a lot of really, really good resources on that site, and a lot of good interviews with other people. So that would be my starting point to learn more about it. For someone who wants to hear what's happening day to day, the crypto Twitterverse, I think, is probably the best source. There are a lot of different people and groups on Twitter that are updating sort of what's happening with fund flows, what's happening with relative value between coins, what's happening with new coin offerings, what's happening with NFTs that are worth following.
But in both of those instances, I do think it's helpful to seek information that takes the flip side of all of those, right? So if you're talking about an organization whose kind of cash is now in Bitcoin, and that would be an interesting perspective. And it's like, okay, well, they may or may not focus most on the bull market, the bull side of this instead of the bear, or Twitterverse, again, same folks, right? I mean, just really, really interested and super interested in thinking about what if and wouldn't it be great, right? And again, as a natural naysayer, I like to make sure that when I'm excited about something, which I am excited about crypto, that I also actively study the naysayers and actively study the folks who are like, it's tulips or whatever happens to be, just to make sure that I'm well versed in those positions as well, and can consider them, especially when I'm considering my behavioral biases.
Yeah, you can definitely find some bears on Twitter, but that is my big caveat on hope.com. But it's a really good place to learn, how a blockchain works, learn, sort of what the difference is between different coins. It's a nice starting point for not as advice, but as education.
Education, perfect. And we're getting ready to come to the close, and we would be remiss, and I want to thank Michael Gengami for bringing this up, which is the environmental impact. We just touched a little bit on mining earlier, and we went by it so quickly that it was the mining for cryptocurrencies. And in that, I don't know, Kristina or Todd, which one of you would want to talk about the environmental impact, maybe what it was, what it is, and then in the future as technology is developing.
Do you want to start with that, or?
Sure, I'm happy to. There's some arguments that I think actually are pretty interesting to learn more about. That crypto is democratizing energy use around the world. So the places where energy is cheapest is where you end up having people setting up mining operations, which means that you're then bringing money into those areas and away from the places where energy is most expensive. It is also then sort of equilibrating the price of energy, because as you get large mining operations in these poor areas, energy becomes more expensive, and then so you end up sort of getting the right balance in terms of how much mining is being done versus how much economic benefit there is to that community for doing it. If you think that this is wrong, that they're sort of wasting resources, well, that should be reflected theoretically in the price of the energy that they are consuming. So that's one of the arguments here. Another pretty significant one is that Bitcoin is becoming less and less profitable to mine Bitcoin, partly because of the natural halving that there's part of the protocol is that the amount of Bitcoin that is added into the market every so often it diminishes over time. And we actually had one of those halvings during COVID, which was one of those confounding factors. But that means that the only people that are mining are doing the proof of work that is necessary to maintain the integrity of the blockchain and to make sure that each of these transactions is appropriately vetted.
Thank you. Kristina, anything to add to that piece?
I mean, I think the question centers around kind of the E in ESG, right? So you've got your environmental, you've got your social, and your governance kind of aspects to investing. And I think, Todd responded by also kind of largely addressing the E. What's interesting, and I feel like kind of the focus on the negative environmental impact of crypto does center around Bitcoin and that mining process. And I don't think it's necessarily applicable to the industry as a whole. But what I also think about is the S part of this equation. So Todd, talked about the democratization of energy use. There's a huge argument about crypto writ large as really helping in terms of the democratization of all sorts of other aspects of finance, right? So enabling, if Todd was, a German resident and sitting here in Germany and I'm in South America, we can send money to each other across borders without having to pay, exorbitant fees to someone else, right? And so that really does help facilitate commerce and transactions in a way that is new and exciting, and really is a very strong positive in the S column. And so it's really interesting to think about all the different aspects of this, technology, but I please, hope and pray personally that from an E perspective, it does get better, and it gets better relatively quickly. And I think, again, this, technology is our friend. And I really hope 5 years from now, it will be a fraction of the environmental impact that it is now.
Fantastic. Well, thank you so much for both of you. And I want to close on the question that Kanan Severin asked, college 2015 grad. He asked if UVA took cryptocurrencies as donation. Kanan, we absolutely do. So thank you so much. We will include that information. We'll include quite a bit of information in our follow-up email for all those who have joined us. And in that, I want to thank Kristina Alimard and Tom Simkin for sharing their time and expertise with us. We're out of time today, but I'm so glad that I could host this conversation on cryptocurrency and what is next. And I look forward to continuing this in the new year. Again, thank you all for joining us, and go Who's.